What's up, everybody? Ryan here. So, streaming from a new office, finally got set up here. Taking the last few weeks off in the market, but want to do an analysis of what's been going on with gold and see if we can try to get a better understanding of where we are and where we're going into the next week. So, as we can see here, I'm on the daily chart, and gold price has been pushing up. I mean, this has been since the start of the whole Ukraine situation. I mean, obviously, prices shot way up. But then more recently, as the situation hasn't cooled, obviously the situation has not cooled down, but it is, I think in the world's eyes, cooled off in the sense that most people don't think at this point, or we hope not, of course, but we don't think that it's going to become the next major conflict, next World War III, if you will, which is kind of what this whole area signifies. And then, price has been dropping down and consolidating here around this 1920, 1900, let's just say on the very low end to up to about 1965. It's been consolidating this range since about mid-March. So about the last month or so, a little less, three weeks to a month or so, price has been consolidating this range. So based on this, what do we think is going to happen? Obviously, this is heavily influenced by fundamentals, what's going on in the world, any number of things. And, as we see here, prices has pushed up, come down, and is respecting and staying in this level. So I think, with us having in the last week, we've maintained again this level of support, and we've pushed now through this level, this weekly support resistance, that has kind of pegged it down here as the midpoint, if you will, in this range almost. And that's right around the 1930 mark. And I think that now that price is pushed above this, we can expect push, continuing up to retest this high of the 1960 range roughly, which that's a great support resistance, a great supply and demand zone, along with a weekly support and resistance area as well. So I think that price may very well just continue pushing straight up through here, or if not, if we drop down a little bit onto the H4. Obviously you're going to have some, back and forth from there, but I think overall price will continue to push through here. But, we're going to be looking for moves, obviously, along this front. Possibly a move coming up, coming back down here, and coming up, coming up, going back and retesting this trend line that I've laid out here, possibly. So, we got a few, different scenarios, obviously, that could be at play. I think this signifying, showing that it broke up, was rejected by this supply zone here and pushed down, and then really formed this level of resistance here, respected this little area here, basically, which is the top of all these peaks here. I think that the fact that it's now pushing up above this means that it's going to continue pushing up, push up past beyond this level to then go up and retest this level up here of the 1958 into the 1960 range. And, it probably will come back down, obviously, in between that point, but we'll see. And of course, this can be very heavily impacted by world news, the way gold always is. But so I think that's pretty much what we're looking at this point. I don't see price coming all. I just don't see price coming all the way back down to here. Gold looks like it's coming to push back up through this range now. It's been making, this nice range in here, especially in this nice 1910 to 1945 area, roughly. It's really been just riding in this range, going down, coming back up, coming down, breaking through it, but then shooting right back up. There's a strong zone here in the 1910 to 1900, 1895, so 150 pip area, but that's a lot of pressure in there to keep it pushed up above that 1900 level roughly. And I think the next, psychological level is 1925, definitely one of them, obviously. Gold, is very big with psychological levels, 5s, 10s, 15s, 20s, so on, 25s even, but I think the 1925, which you can see, that's also an area that has a lot of movement, a lot of areas of contest. I see that pushing past that now where we are, pushing past this 1932 weekly support resistance area. I think now, we're going to just keep on pushing up until the 1950 at least, which is about here, which is just pushing out of that zone. So again, maybe we could be looking for a push back down here and then a push up, or maybe just pushing up, coming back down. I'm never going to get into a trade right at market open. I've learned too many times that it's just not a good thing to do. I'm going to wait for it to play out a little bit, see where it's headed in the week. At least wait for a London session of Sunday night. So we'll see what the move is going to be. But, I think definitely is a case for it to push above this range and continue pushing back up. And then if we see here now on the daily, let's grab our Fibonacci tool here. If we grab our Fibonacci tool and then we go up to there, what do we see? All right, we also see that this is aligning pretty well with the 50 area, this down here, the 61.8 even. So price has gone up, came back to the 61.8, pushed back up a little, it's kind of been stuck in this range. But I think there's definitely a lot more of a bullish case still. I think the bullish bias is maintained. The fact that it's respecting this area here, this heavy support here from 1920 down to like 1895, it definitely, I think, has a case for continuing to push up and then breaking above these minor areas of resistance here around 1935, 1925. As you can see here, closing with that very strong daily candle. Let's see how the weekly closed. So the weekly, I mean, it was a very strong candle, but it didn't fully engulf and push above this prior week, which is all right. This was a pretty weak bearish candle the week prior. It pushed down and it really, was getting pushed back up pretty heavily. So this also might be something to consider on the weekly, which I don't like really doing fibs on the weekly because it starts to get a little chunky and erratic, I feel like. But let's just see. So yeah, basically aligning more or less the same, about the 50. Yeah, about the 50 there. So I think the case is a lot stronger for a bullish continuation than a bearish trend beginning. For a bearish trend to really begin here, price will have to reject this area or higher area, whatever, push down and really just break below this, but not break below it and wick back up like it did all these other times. Like break below it, bam, a strong candle breaking below this, and then that I think would signify right now there's potentially a change in bias, a change in momentum to the downside, pushing down. If it breaks down below this 1920, 25 area, definitely if it breaks down below this 1895 area, there's nothing really to hold it up. Next you got 1884. Next you got a little area, we got weekly support and resistance area there, 1858. And then it just drops, 1822, 1795, 1800 area. So I think, myself, I'm going to be looking for more bullish opportunities now starting off this week. Once the market gets rolling for the week, I'm going to be looking for maybe a pullback here and then a push back up, continuing this push up. But of course, we will see what happens and we will see what the market gives us. So that is my analysis here of gold for the last couple weeks, last week or so, and what I'm thinking for now, the week moving forward. So what I'm planning to do, and hopefully I'm able to do this consistently. I really want to, so that way I can not only grow my trading, but document my journey and potentially help you guys in your journey as well. I'm going to be streaming here every night, London session. So I'm planning on streaming from 2 a.m. to about 7 a.m., maybe a little bit earlier, maybe 6 a.m. We'll see. I mean, I got to see. I'm going to be testing it out. So that's my plan. My plan is to be streaming every day, London session, Monday through Friday, and then, seeing where it goes. So if you have any comments, anything you want to add, definitely feel free to drop a comment below, and I'll catch you guys in the next video. See ya.